Hello, today I will going to be take SY BCom 4th semester Business Economics. I will going to be explain the module number 3rd, chapter number 9, public expenditure and the social welfare. First, I will go with significance or importance of public expenditure. The first one, a provision of public and merit goods. Public expenditure provides the people of the country with public and merit good. Public goods and service included defense, law and order, justice, transport infrastructure, water supply, etc. No citizen is excluded from the consumption of these goods. They are consumed equally and jointly by all, even by non-taxpayers. Merit goods fall in a category between public and private goods. The increased consumption of these goods and services benefit the nation. For example, health, education, food supply, housing, merit goods are provided by both the private sector and the government. Next significance is meeting current consumption needs. In developed countries, the main aim of public expenditure is to maintain high level of consumption demand of goods and services. This is done through the expenditure on social security measure like old age pension and unemployment benefit. Transfer of money from the government to the people help to maintain high level of consumption. In developing economies, current consumption demand are made through program and scheme that are targeted primarily to the poor. This included employment program and public distribution program. Next significance is capital expenditure. Investment in infrastructure project is an important objective of public expenditure, particularly in developing countries. Huge capital expenditure is necessary in such economies to improve productive efficiency and promote GDP growth. Capital expenditure also create employment, but such investment expenditure might result in reduction of expenditure on meeting current consumption demand of the poor. Therefore, the government must maintain balance between capital expenditure and a revenue expenditure. Next, distribution of income. Public expenditure aims to reduce the gap between the rich and the poor. This is done through the social security measure adopted in developed economies. In developing economies, government are various poverty reduction and employment generation scheme to improve income distribution. All this measure increase the purchasing power of the poor. Subsidized given to the farmer and small businesses also help to reduce concentrations of economic power. And the next, economic growth and development. Now in economic growth and development, where the productive capacity, public expenditure on infrastructure improve productive capacity. Expenditure to keep aggregate demand like social security spending increases production and generate employment. Expenditure to redistribute income like subsidies to the poor. Improve this consumption level since the poor have high marginal propensity to consume. This lead to higher demand for goods and services, generating more productive activities in the economy. Subsidies given to the producer like farmer, small scale unit and exporter also help to increase production. All this result in higher economic growth. However, development is a qualitative concept. It takes place when there is an improvement in the quality of people lives. Expenditure on social sector help to bring about development and a better standard of living. Next, I will go with the public expenditure and social welfare. Now, in our social welfare expenditure, I will going to be explained first with social insurance program. Now, and later on, I will going to be explain our social insurance scheme in India. Now, in our social insurance program, there are different categories are there. The first one, which is known as compulsory participation. The most people participating in social insurance program do so as a result of a legal requirement. In some program, a small minority may be allowed to choose whether to participate or not. At times, the social insurance program is so highly subsidized that most people in the targeted population group can afford to participate in it. Next, government sponsorship and regulation. Government initiate and create social insurance program but do not necessarily manage them. The program may be operated by the private sector entirely or in partnership with government agencies. Next, contributory finance. The program may be funded by tax collection, but in most of the cases, they are funded by premium or contribution paid by the participant from their income or paid by the employer, fully or partially. A worker contribution is usually a fixed percentage of his or her wage or income. Next, eligibility derived from contribution. Eligibility for benefit under social insurance program rests in part on current or previous contribution by the individual and or the individual employer. Next social insurance program is a benefit prescribed in law. The benefit eligibility of participation and other aspects of the program are defined by law. Any desired change in any aspect of the program can be done by amending the law governing it. Next one, the benefit not directly related to contribution. Social insurance program usually redistributed benefit in favor of lower wage worker or toward person engaged in activities that are socially desirable. This is seen most prominently in health insurance and pension benefit, in which higher wage worker contribute more than lower wage worker, but everyone receive the same benefit. And lastly, a separate accounting. Social insurance contributions are usually earmarked to pay the social insurance benefit. Government keep separate accounts showing comparison of program receipt and a program benefit. They also develop a plan showing that projected revenue are sufficient to finance projected expenditure for several years into the future. Next, we go with social welfare expenditure with a social insurance scheme in India. Now, there are various insurance schemes are there. We're going to be learned with first Mahatma Gandhi National Rural Employment Guarantee Act program that was introduced in the year 2005, an employment guarantee program that was implemented in the year 2006. It aims to enhance livelihood security in rural area by providing at least 100 days of wage employment in a financial year to every household whose adult member volunteered to do unskilled manual work. The funding of the scheme is shared by the central and the state government. Next one is Sukanya Samriddhi Yojana. This is a part of Beti Bachao, Beti Padhao mission of the Government of India. It is a saving scheme targeted at the parents of girl child. It encourages parents to build fund for the future of girl child. Annual contributions to the scheme ranges from the minimum 1,000 to maximum 15, that's a lakhs. Next, a Pradhan Mantri Jan Dhan Yojana. This scheme aims at financial inclusion by offering basic financial services like saving account, deposit account, insurance, pensions, remittances, etc. It provides zero balance saving account, debit card facilities, and accident and a life insurance cover. Next insurance is Public Provident Fund. This is also a very important social insurance scheme in India. The Public Provident Fund schemes 1968 is a tax-free savings scheme that was introduced in the year 1968. Interest on deposit in the Public Provident Fund account is tax-free. Deposit made towards Public Provident Fund account can be claimed as tax reduction. It was launched to encourage saving among Indians in general, especially to encourage them to create a retirement corpus. Next, social insurance scheme is a national savings certificate. The national savings certificate is a government of India saving bond used for encouraging small saving and income tax saving investment in India. It is a part of the postal saving system of Indian Postal Services. These are issued for 5 and 10-year maturity and can be pledged to bank as collateral for availing loans. Next, Atal Pension Yojana. This scheme was launched in the year uh, 2015 on the month of June with the objective of benefiting people working in the unorganized sector. It is administered by Pension Fund Regulatory and Development Authority under the National Pension Scheme. The scheme was launched to encourage individuals from the weaker sections to benefit from regular pension. The Atal Pension Yojana can be taken by individual working in private sector organization or by anyone who is self-employed. Under this plan, the subscriber will receive a fixed pension after the age of 60 depending on his or her contribution amount and the tenure. Next social insurance scheme is a Pradhan Mantri Jeevan Jyoti Bima Yojana. This is 1 year life insurance scheme renewable from year to year, offering covering for death. The cover under Pradhan Mantri Jeevan Jyoti Bima Yojana is for death only, and hence benefit will accrue only to the nominee. Pradhan Mantri Jeevan Jyoti Bima Yojana is a pure term insurance policy which cover only mortality with no investment component. Pradhan Mantri Jeevan Jyoti Bima Yojana is available to people in the age group 18 to 50 years having a saving bank account. And lastly, Ayushman Bharat Yojana, it has two components. The first one, the National Health Protection Scheme, and the second one, Wellness Center. A National Health Protection Scheme provides cashless treatment to the patient. Wellness Center provides primary care to patient. The program was launched on 15 August 2018 by Prime Minister Mr. Narendra Modi ji.